Hello, everyone, and welcome back to another Monday update on our paper portfolio. Normally, I check in a little earlier in the day, but today got away from me, so we're taking a look after the market closes. Let's start with where the portfolio stands. Our paper account is currently valued at approximately $8,979 over here, with an average gain of about $979, which puts us up a little over 13% since inception. Current positions like AMD, Celsius, Elf Beauty, Meta, SCHD, SoFi, and VTI. Now, one thing I want to talk about this week isn't necessarily any individual stock. It's the environment we're investing in. Over the past week, we've seen a lot of volatility. We had the inflation report, ongoing concerns around the conflict involving Iran, and of course, the market has been reacting to the recent SpaceX IPO and all the attention surrounding it. When the market becomes volatile, investors often feel like they need to do something. They want to react, they want to sell, they want to move money around, they want to wait for the perfect time to get back in. But this week is actually a great example of why volatility isn't always your enemy. One of the biggest mistakes investors make is trying to time the market. The challenge is that nobody consistently knows when the market will have its best days. There have been studies showing that if an investor misses just a handful of the market's strongest days over a period of years, their returns can be dramatically lower than someone who simply stayed invested. The problem is that the best days often happen right after some of the worst days. By the time things feel comfortable again, most of the recovery may have already happened. That's one reason why I focus so heavily on owning quality businesses and broad market funds. Once I decide I want to own something, I don't want to constantly second guess every headline or every red day on the chart. Volatility can actually be a gift. It creates opportunities to buy shares at more attractive prices, and it reminds us that investing is a long term process, not a daily prediction contest. So, as I look at the paper portfolio today, there's really nothing I need to do. The market is closed, the positions are in place, and the portfolio is positioned to participate whenever the next move higher occurs. Sometimes the most productive action an investor can take is simply staying disciplined and letting time do its job. Thank you for following along with this journey. I'm going to continue posting these updates every Monday so we can learn together and watch how a long term portfolio develops over time. So, just a couple of things before we sign off. This portfolio wasn't built to predict what happens next week. It was built to participate in what happens over the next decade. The second thing I wanted to mention is on the Facebook group, Renee's Reign, Designing My Freedom, I actually posted a video from a YouTube content creator, investor, trader, and he does other things. His name is Tyler Hill Stocks. That's the name of his channel. And he's a relatively newer person to YouTube. He just opened the channel about a couple months ago, but he's already got like I think 11,000 subscribers. And that says something to the content that he creates because I came across him because we both invest in SoFi. And so when he had I go through a couple of videos and I ended up clicking on his because he had a perspective, and SoFi was really volatile at the time, and I appreciated his insight. So long story short, so he did a video recently on the Bollinger Bands, and I don't use them for my investing and trading, but I thought it was very well presented for both beginners, and he does a more technical explanation of what it is, and he's easy to follow, and he's very thorough, he's grounded, and he's not very hypey, like, when he delivers his content. He's very grounded and down to earth. So I posted that video in the Facebook group if you want to watch it. And, if you like his content, you can subscribe to his channel. But Yeah, he's really good with that. So I'm going to show you the Bollinger Bands just really quickly, so you'll kind of say, well, what is that? So this is SoFi Technologies, and this is our position. And he basically breaks down what these lines represent. And if I recall, he said that blue line represents the 20-day moving average, and this red line would be an area 2 deviations above it, and this would be a line 2 deviations below it. And basically, when price goes up and hits close to this band, it almost acts like an elastic to pull the price back to this blue line. But I'm not going to go in and try to explain it because he does a very good job at doing it. I need to watch it a few more times myself because indicators can be very good tools for showing you what to, not to predict the market, but just to kind of understand what the signs are suggesting, what's being suggested, so you can just have a little bit more of a confluence on what price may or may not be doing. And indicators, some traders and investors really like to use them. So I think that's it. And you know what? I'm going to see you in the next video. Have a great day, and I'll talk to you soon. Bye.